Hello traders and welcome to Rocket Stock Picks. On this channel, we'll be focusing on stocks I believe have a potential for high growth. I'm new to the market but have managed some solid gains so far. Now, keep in mind I am not a financial advisor and this video is not meant to be taken as financial advice. So with that being said, let's get into the video. Now, before I start, I quickly want to apologize for not posting for the last 2 weeks. I'm a university student, so I was really busy with midterms and assignments, but my schedule is a little lighter now, so expect more regular uploads from now on. Anyways, as you can tell by the title of the video, this will be a top 5 stocks to buy after the recent market crash we have seen. I won't be doing a deep dive on every company on this list, instead just telling you what stocks I personally have my deepest convictions on. So with that being said, starting with number 5 on this list, we have MindMed, ticker symbol MMED. So if you don't know what MindMed is, they are a healthcare company focused on using psychedelics to treat a wide variety of mental illnesses. So briefly, this is why MindMed makes my list. To start off, the clinical trial results have been very positive. Now, not only have some of their results been very promising, but they are also focused on an industry of psychedelics that no one else is really tapping into, and they are trying new ways of treating disorders that have never really been tested before. MindMed is definitely one of the industry leaders for Canada at least, and I think that MindMed could be onto something very special here, a very new way of treating mental disorders, and many other investors do too. So if we take a look at the price action, we can see this stock is still discounted heavily from its former highs. MindMed ran to over $5.50 after more clinical trials and press releases came out, but now it's consolidated at around $3.60 Canadian. So compared to its 52-week highs, it's still on a very big pullback. Finally, MindMed also currently has over 200 million Canadian in cash right now that they're sitting on. Now obviously this cash helps for a healthy balance sheet, but also can help with acquisitions, which is a way MindMed has grown in the past. As you can see, on February 26, MindMed closed its acquisition of HealthMode, a leading machine digital medicine company. Obviously, not all of the 200 million will be for acquisitions, although acquisitions are something to keep in mind going forward as they're always a nice press release for the company. To wrap this up, I currently have 700 shares at an average price of $2.15 Canadian, and I don't plan on selling anytime soon. So moving on, we have another healthcare company known as Mountain Valley MD, ticker symbol MVMD. Now, if you've been following the channel for a while, you might be familiar with this company as I called them out back when they were at 43 cents. I believed they were really undervalued at the time and their tech wasn't really being realized by the market. And ever since the buy-in, they have exploded in price and were trading over $2 before the market crash that we've seen. Now we have a small recovery, but the stock's at $1.65, which is still a pretty big discount from when it was trading over $2. To sum up Mountain Valley, they have a lot of tech developments geared towards new and improved ways of drug consumption. They have a patented Quicksome Technology, which is a soluble oral strip that allows for the consumption of medical drugs. What makes this even more special is that the technology makes the drugs more bioavailable to the body by using patented liposome technology. What I love about them is they are still developing new patented products using this Quicksome technology today. As you can see, Mountain Valley MD achieves solubilization of selamectin, files trademark for Silactosol. So to go along with their new development, Mountain Valley MD has also recently confirmed that their Quicksome technology has made its first revenue. Basically, how they earn revenue from their Quicksome technology is by letting other companies apply their drugs to their Quicksome technology and getting money either through a contract or royalties. Now, I actually made a video calling out this company January 9th when it was trading around 45 cents, and ever since then I've bought in at an average price of 43 cents and I've just been holding my shares ever since. The next stock I want to talk about is IQSTEL, ticker symbol IQST. So what is IQSTEL? Well, they provide services to the telecommunication, electric vehicle, liquid fuel distribution, chemical, and financial services industries. They also have 4 business divisions: telecom, technology, fintech, and blockchain, with worldwide business-to-business and business-to-consumer customer relation. This company is basically like owning an ETF, and as you can see, they have 7 operating subsidiaries. This means they have a lot of different sources of revenue, which is great. Next up, here are some notable press releases over the past month. On March 15th, IQSTEL announced a 288% increase in revenue for February 2021, which is supporting their $60.5 million annual revenue forecast. They reported revenues of $4.86 million for February 2021, compared to 1.68 million in February 2020. On February 17, 2021, IQSTEL eliminated all debts in form of notes, becoming a debt-free company. This next press release is very interesting and sounds very promising. So IQSTEL new Visa debit card service scheduled to launch by June, initiating 128 million revenue stream opportunity. So the plan right now is to build a Visa prepaid debit card service. IQSTEL plans to partner with another company and create a new subsidiary corporation. IQSTEL will own 75% of this new subsidiary, and PayVMS will own the other 25%. Now finally, I just want to mention IQSTEL also plans on uplisting to the NASDAQ, and they are also selling at a very large discount right now. As you can see, they've peaked all the way up to $2 but have since fallen down to the $1.06 mark. Next up on the list we have Torchlight, ticker symbol TRCH. This play is pretty unique and there's a lot of moving parts, so try to stick with me here. Torchlight is an oil company that is getting ready to complete a merger with a company called MetaMaterials. Torchlight is selling off its assets for cash, and Torchlight share owners will be entitled to a special dividend at the end of the year. This special dividend depends on the amount of money that the assets that get sold off from Torchlight make. Also, Torchlight shares will be converted into META shares under the company name MetaMaterials. So, what MetaMaterials does is produce metamaterials. Pretty simple, right? In case you're wondering, metamaterials are artificial materials that can achieve electromagnetic properties that do not occur naturally, such as a negative index of refraction or electromagnetic cloaking. Meta's products can be used in a wide variety of different industries, as you can see here. Meta is using these developments for a number of different solutions. One cool one I saw on Meta's website was their non-invasive glucose monitoring. Now, if you're familiar with the company Sensonics, you'll know that they have a glucose monitoring system that recently got FDA approval. Now, this catapulted the stock all the way up to the $5 range before the crash. So this is just one example of the potential that Meta has. Obviously, they have much more developments that are also very promising. Now finally, this is just the icing on top. There is a ton of insider buys for Torchlight right now. As you can see, they're currently in the 99% range for dollar volume of insider buying, and in December of 2020 there was a huge spike in insider share buys. My final stock on my deep conviction list is going to have to be Palantir, ticker symbol PLTR. So I recently put out a video talking about a rumor that Palantir is involved in regarding a possible AT&T contract, which is a Fortune 500 company. So link to that along with my original video on Mountain Valley MD in the description below. If you don't know what Palantir is, they're a software company that specializes in data analytics, and using their industry-leading tech can help to reduce operating expenses of businesses. Through my own due diligence and understanding of Palantir, I think they have some of the best potential for long-term growth. Kathy Wood of ARK Invest agrees, as has been loading up on Palantir shares since the market pullback, which I also talked about more in depth on my Palantir video. Palantir has also recently developed software in partnership with IBM that will be showcased at a demo day in April. This partnership opens them up to a wide amount of possible new customers. A user on Reddit found a link to that demo video, which I watched, and will link in the description below. Speaking of new customers, Palantir also has a contract with Amazon, and their technology runs on Amazon Web Services, or AWS, to assist customers with data integration and analysis. The amount of companies that use AWS is absolutely huge, so Palantir working with Amazon on their AWS platform opens them up to even more opportunities for revenue. As you can see, I bought Palantir at the $14 range and held it all the way up until $28 before it was getting shorted. At that point, I sold it and just increased my position around the low 20s range. Now I've just been topping up ever since and plan on holding it for a very, very long time. That's going to do it for today's video. Make sure to check out my Patreon, link in the description below, to get access to all of my stock picks and reasoning as they occur. I also have a free Discord with a growing community of investors you can join, so be sure to check it out. Link is also in the description. So, if I provided you with any useful information or added a stock to your watch list, be sure to like the video and subscribe so you don't miss out. Special shout out to those who are supporting me on Patreon, and as always, thank you guys for watching, and I'll see you all next time.